Good afternoon. What's up? All right, let's get it started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Today is April 20th, Thursday. There is the position disclosure. I got into and out of a decent amount of names today. I got flat on S, TNA, Fastly, Pins, Shop, Tesla, Bank of America, TQQQ. I was able to be profitable on all of them except TQQQ. I took a loss trying to fight that TQQQ a little bit into the close. If I kept it for a few minutes after the close, I would have been able to get out for break even. But that's not what you do. You follow your game plan. And my game plan said, you're not holding this position overnight. You're liquidating by the close. So I liquidated into the close on that TQQQ for a reasonable loss. And everything else was pretty decent. Really interesting day today. We had a decent amount of intraday volatility, starting with the bounce off the open from the gap, sideways action, midday upside grind, and then this market completely fell apart at 2 o'clock. Completely fell apart before having a little bit of a rally into the close. So, really interesting move. I mean, going over to the daily chart just to kind of recap the morning meeting and the early trading today. So we opened up with the exact same situation as yesterday. A common gap down in a bullish market. The good book of technical analysis says that you want to come in and buy a common gap down in a bullish market. The little difference that I noted in the morning meeting that had me a little bit more nervous than yesterday, even though I still basically followed the same game plan of kind of buying pre-market and buying the open, was the fact that we were gapping below this like grindy trend channel that we've been in. Whereas yesterday we gapped right to it, today we gapped below it. And whereas also yesterday we gapped right to the ADMA on the daily chart, today we gapped below the ADMA on the daily chart. Again, none of this is the end of the world. None of this means that the market is automatically bearish from being bullish. It's just a smaller thing to take note of, where maybe the market is signaling that it has to have a little bit of a deeper pullback. I mentioned somewhere between 410 and 408. Low of the day today is 410.27, so we just about got to that upper area that I discussed that would make sense on a little bit of a pullback. But for the open today, at least, it was the same game plan. Kind of look to buy the open, maybe don't be too aggressive, but look to buy the open and then see how the market handles the downside extension from the gap. And that worked out well. We had an immediate solid uptick from the SPYs and the Qs. The IWM was notably relatively weak, but you can look here for the SPYs. First 3.5, 5-minute bars, really strong. Then finally a little bit of a tail as the ADMA was beginning to kind of catch up there. If you look at the Qs were really strong. 3 very solid bars. 4th bar with a little bit of a tail into the ADMA, and then just kind of a rest and a higher low after that. The IWM was where the weakness was. The second day in a row we've seen this, by the way, on our gap downs. Yesterday was a very similar situation where the SPYs and Qs are trying to be strong and the IWM was being weak. The Russell was selling off early. Today the Russell was selling off early. These first 3 bars were very concerning. I called for a bounce in the IWM off this 3rd bar, just off the extension. It's the same kind of thing. 3 bars down off the open, some selling early on. We actually broke yesterday's low by a little bit right at the open. You do have relative weakness in the IWM and relative strength in the Qs. That could be very concerning. You don't want to see the Qs pivoting off the ADMA on the 5-minute chart, which is basically what was happening with the Qs you don't want to see the Qs bouncing and pivoting off the ADMA, giving a pullback, as the IWM is just kind of straight selling off, because that's a signal that everything could fail. But looking for the oversold bounce to come in. This is when I called out my long in TNA. Really was just looking for a move to the ADMA. This 5-minute bounce candle here at 9:45 significantly exceeded my expectations. We just get like a sick engulfing candle that engulfs the first 3 bars of selling, brings us to new highs, and gets us to the ADMA. I liquidated that entire TNA position within this 5-minute candle, because again, all I was looking for was a little bit of a bounce trade. I didn't have a ton of size, so it was relatively light. It was just a small winner for me into the ADMA. I got it, and then we got higher lows across the board. You see the IWM pulled back, but gave a nice looking higher low on the 9:55 candle. The Qs, which were the leader, barely pulled back at all, but gave that higher low. The SPYs pulled back, but gave a higher low. XLE was acting a little bit relatively weak at that time. XLE was actually selling off really heavy, but I actually also called out for an extension long in the XLE somewhere around this candle. I didn't actually take that trade, though I did have some CVX, some Chevron for a bounce, which ended up paying me a little bit also. And then at that point, things are looking great. You know, I'm kind of patting myself on the back, to be totally honest with you guys, as I was getting off the radio today around 10:30, because, you know, we game planned it perfect. It was the exact same thing. There was nothing to be worried about. Common gap down in a bullish market, buy that dip. Got a great opening rip. They honestly made it super easy. I was in Fastly off the open. I had Shopify. I had Pinterest. I had S that I all bought into, and Bank of America. I liquidated all those positions into that bounce, kind of as per my game plan. And then, you know, once we got over into this more neutral area, you know, we had kind of just about nearly filled the gap. It was a full 15-minute correction. SPYs were maybe a little bit weaker, but they gave a full 15-minute correction. And the IWM had gone from relatively strong to relatively weak, and was the one index to basically fully fill its gap. So once we got up to this area, I was like, okay, like, I'm kind of done for the day. You know, like, I really felt once we got into here that it was almost like, you know, I'll actually look at the SPYs. Once we got into here, that the market kind of became a coin toss at that point. I felt with almost equal probability could it continue to grind up, move sideways, or roll back down. And the easier trade that I was looking for was already done. I had made my money in it. So, you know, I was more or less planning on being a bit hands-off at that point, and I was just kind of managing the open swing positions that I had. And interestingly enough, the intraday relative weakness, relative strength flips from the IWM are interesting, right? Weakest, strongest, weakest, strongest. Weakest off the open, strongest into the bounce, weakest on this pullback at 11:30. Look at that massive pullback in the Qs. In the IWM versus the Qs, it's like nothing. So some interesting intraday volatility, relative strength, relative weakness kind of flips. But broadly, the market stayed strong. Even with this heavier pullback on the IWM, we found a higher low versus the open. We bounced back. The Qs were monstrous, eventually filling their gap and going green. And then at 2 o'clock, this sell-off came in and was vicious, particularly with the Qs. That relative strength that we then had again from the Qs when it was kind of at highs was totally out the window. This sell-off was like ruthlessly insane on this pullback. The IWM in SPYs pulled back as well, but the IWM is really not nearly as bad. I know we kind of retested opening lows. But the Qs went from being positive on the day to, when the sell-off starts at 2 o'clock, you know, still being green, making new lows on the day. I mean, just look at this sell-off over the course of this hour and a half. There's barely a rest. There's barely a price correction. You almost don't really see this very often at this time of the day without like a news event actually occurring. And we can certainly, you know, discuss whether or not there actually was a news event. I know this article or whatever was starting to get circulated that Russia is preparing to attack the UK was going on when this sell-off was happening. I started buying the Qs way too early. Very light initially though, luckily, at about 2:30. I think on this 2:30 bar was when I first bought some TQQQ. Just looking at, I was basically looking at this low here, with the degree and speed of the sell-off. And that's been a very consistent trade for me, honestly, when we have been in this more or less range-bound market that we've been in with some intraday volatility really over the course of the entire year of 2023 so far. Whenever you get those really, really big, multi-bar moves, especially if there's no major move, no major news that seems to be moving it, coming in counter trend after some patience on that for bounce trades has just been like a really consistently profitable trade for me throughout this calendar year. But I lost money on this one. Luckily, I started really small and I had some good executions, because otherwise it actually would have been much worse. I started real small, just thinking, all right, let me get a bounce back to the ADMA, but I also want to leave room to build in because there's no real signal here. I did see volume increasing and beginning to maximize coming into this previous intraday support with whatever this is, 10 large red 5-minute bars in a row and 5-minute extension at that time as well. But there was no real candlestick signal for the buy yet. So I was like, all right, I'm going to start real small, similar to what I did in TNA in the beginning of the day. I'm going to just be real small here. Let me just see if I can get a bounce back to the ADMA, put a few bucks in my pocket for like a cute little trade. The market, as soon as I got in, was continuously super heavy. I couldn't get any stock off. We sold off further. I got a really good ad that kind of helped me out. I took a decent sized ad that happened to be near this low, and then I sold that ad into the move higher. So that helped me a little bit, but I still had a position. Market took its next leg down, and then I had another actually pretty decent ad. Not perfect. It wasn't lows, but straight in TQQQ, and I got some TQQQ at like 26.57, 26.52, and 26.51. That's the one that I was actually trading. So I got some like 26.57 on this bar, and then some 26.51 and 52 on this bar as another ad, and then I was able to liquidate, that, and then some of what I had even earlier kind of into this bounce, and then I ended up just kind of closing the position because I was out of time. And again, it was for a loss. I did feel if I had a little bit more time, I could have continued to work out of the position and not taken a loss on it. But I was out of time. I had a game plan. I ended up down a not very big deal amount on it, and it was just, I'm not taking overnight risk to try to make a loss back. That's silly. I had a game plan. I kind of followed it. I was a little bit too early on the trade. The degree of the weakness and the degree of the selling surprised me. I was kind of calling BS on that article. I just would think if there is a real imminent attack from Russia on the UK, that it's going to look significantly worse than this. I think it was Mike L that mentioned that gold would also be ripping, but gold, there was no rip on gold with that. It was just a technical sell-off here in the market, and I think Pat said it right. The VVIX has been the warning sign. We started seeing that VVIX divergence, I guess, yesterday or 2 days ago. The market's continued to hold in really well. Buying the gap down for 2 days in a row worked really well. It worked great for me yesterday. It worked great for me today. And then, that VVIX divergence is going to eventually satisfy itself. The market, sells off real hard into the close here, and that's exactly what happened. It was just led by these Qs also. I went after the Qs because they sold hardest, so I thought that they'd be the best bouncer, but really it would have been much easier for me I would have made money if I did TNA instead of TQQQ, but whatever, it is what it is. Kind of a wild day, and at the end of the day here, we're left with a not so great looking doji. I actually thought for a minute, and I know we rallied into the close, I thought for a minute that we're going to close on lows. A close on lows actually would have been very concerning for me. We would have had like this failure topping tail, even though it's not at the top, but this failure topping tail type of candle, shooting star type of candle off of the area where you should bounce from. So what would that mean, right? So if you got an area where the market should bounce from, 410 in the SPYs, a common gap down in a bullish market, and the market bounces really well off of it like it's supposed to, but then sellers come in the afternoon and they sell you all the way back down and they close you on lows, it's really showing you that buyers are becoming tired, sellers are becoming more aggressive. You get that close on lows with sellers coming back in after it seemed like they were defeated once again. And that could really be a signal that some bigger daily chart selling actually could come into the market. But we didn't close on lows. We had a pretty significant rally, especially in the last 10 minutes, especially for the SPYs and for the IWM. I mean, you look at this IWM daily candle, it doesn't even look like anything happened today, but there was actually a lot of kind of intraday volatility. You look at the Q candle here, and yeah, you got a little bit of a tail there as well on the upside, but it's not terrible. It's still fully within the range. And, SPYs are still kind of holding in also. So we'll see how it plays out. I would have been much more concerned for bulls with a close on lows and a big topping tail. We caught that rally into the close. I do think that this afternoon sell-off is something that we should note and we should keep in the back of our heads. But for the moment, the bullishness of the SPYs and Qs are still intact. The IWM is still neutral, but it's still in this upper consolidation zone within this bigger range that it's been in, and it still needs to really get above this 178 to 180 area in order to prove itself, and I think that brings the whole market up. And then it's just the same situation of, well, maybe we're just waiting for earnings next week. I think I saw that 34% of companies in the S&P are reporting earnings next week, and we have the vast majority of the real big market cap stocks. Though, interestingly enough, Apple's not next week. Apple's in 2 weeks. But, this market maybe still looks like it's just waiting for earnings to kind of come through for the rest of the market. So, we'll see how that plays out. As far as names go today, I basically followed my game plan on things I wanted to be involved in. I finally got the little bit of a bigger dip in Bank of America that I wanted, so I bought some pre-market, actually below the low of the day. I sold that into the up move, still holding above 29, so that made me a couple bucks. I got back into this S on this gap down this morning. That was actually extremely strong. That was able to make me a couple of bucks. I got into Shopify on the test of this ADMA. That bounced off the open. That was able to make me, a few dollars today. Fastly was a new name for me today, and this Fastly ended up failing. I'm not surprised. Off the morning meeting, it had an inside and up on the daily chart plus an upgrade. So the original plan, I was buying this off the open versus yesterday's high, which is the inside day high. So that high is 61 cents. So my initial stop, I'm looking for 60 cents. I want this ADMA to catch up. It puts in an opening low. It's actually not a real opening low, but let's just say it is at 64 cents. So I want to raise my stop to that, but I need the ADMA to catch up. Eventually it does. I sell some stock into this move. I rebuy a little stock. I sell some stock into this move, and then it just wasn't acting right. Honestly, even when it was going here, it was weaker than the Qs. The momentum that I wanted to see, like a short squeeze volume that I wanted to see, never really came in. So I ended up just trailing it super tight. I raised my stop from yesterday's high to today's low. Then I raised my stop from today's low to the 945 low, and then I even cheated a little bit, and I raised it to the 10 a.m. low because it kind of broke out of the consolidation from there on this ignition type candle. And then I ended up getting stopped out of the remainder of my position here. I made money in it, and I moved on, and the thing just wasn't acting right, so I'm not surprised to see that it actually went red and was weak today. And I think that sums it up. I wasn't really involved with the Google through 104, but that was another one that we were looking at for off the open that worked out great. And that never even breached it in the heavy QQQ sell-off into the close. So that was a good one, too. All right, that's all I got. Happy to answer any questions anybody has. First thing I'm seeing here is from Kyle. Kyle, I saw your email. I apologize. I haven't just had time to respond yet, but I'll get to you as soon as I can. So a couple questions. So you traded Apple today on the break of the inside 5 at 940. Okay. Okay, I like it. I never got my risk covered. risk covered on this move? What are you using your stop loss as the inside 5 out? Inside 5 low? So you got like 55 cents worth of risk approximately. This upticks to just 33 there. This upticks to 167.40. Interesting. Well, eventually it holds your stop loss. You just have to be super patient, and you finally get the move. I remember Apple actually acting a little bit relatively weak here, but the Qs were still acting well. So I haven't read the rest of your question yet, but what I really hope that I'm about to read is, hey, I had my game plan. I didn't get the immediate reaction that I was looking for. I really wanted to get that one-to-one kick so I get my risk off the table. I had my stop in. I sat in this thing all day, and eventually I was able to get my one-to-one at 11.50 or at 12.30, and then the thing failed and I wasn't selling anything else, or maybe even raised your stop to this low. If you raised your stop to this low, you made money in it. If you didn't raise your stop, if you kept your original stop, then you're break even. That's what I want to see. Let me actually now read the rest of your question. So you bought there, you never got your risk covered. However, as time went on, Apple created a higher low. I moved my stop to the 10 a.m. low. I'm fine with this if you did it after the new high came in at 10.10 and then you got stopped out. I'm actually fine with this. Since this decreased my space risk, should I have simultaneously moved my one-to-one lower to equivalent the space risk of the new stop? So the answer to that question, I don't have a hard rule on that. I would love to say, because in an ideal world this would be accurate, that I have a rule for every single possible thing that could happen in markets, and for the most part I do, but there are a couple things that I kind of leave more to the circumstance, and this is one of them. You know, so first of all, you know, this is kind of rare. It doesn't happen too often, where the stock is giving you an opportunity to legitimately raise your stop, yet you haven't even gotten your one-to-one yet. That doesn't happen too often. It tends to only happen if you have a lot of initial space risk. And I wouldn't say, you know, 50 cents or whatever we just said for Apple is necessarily a lot of initial space risk. It's a decent amount, but it's not so much that it's a problem for your trade, I think, or anything like that. Much more than 50 cents, and it starts becoming a lot. So the first thing I would say is that this is a relatively rare situation. But just because it's a relatively rare situation doesn't mean that I shouldn't or you shouldn't have a specific rule on what you do. I just want to be honest with you that I don't have a specific rule on what I do. I've done it both ways. I've raised my stop and lowered my one-to-one when I have felt uncomfortable about the trade. I've also raised my stop but kept my original one-to-one when I felt more comfortable about the trade. And I know what I'm saying here is wrong, but I'm just being honest with you. I'm saying felt, right? I just said the word felt twice. What you should be saying to me is, Derrick, I don't care about how you feel. I want to have a game plan that can breed consistent profitability that's based on rules. But again, I'm just, I'm honest. I'm not fully a perfect trader, even though I'm working towards it. We're all working towards it. So I don't really have a specific rule. I kind of do it a little bit depending on the situation. Another thing that I do assess is, and probably I shouldn't, I probably should just have a consistent rule. But another thing that I do assess is, in the raising of the stop, am I raising my stop, like, is it enabled me to raise my stop to my price or even above my price? Because if I can raise my stop to my price or even above my price, even though I haven't got my one-to-one kick, then I you know, that inherently, like, makes your question like a moot point, because what is a one-to-one kick if your risk is 0 or negative? You know what I mean? But that's a great feeling. Again, this is a rare circumstance, and it tends to happen when you have more space risk, not less space risk. If you got a ton of space risk, oh my gosh, wow, the stock's letting me raise my stop to my entry point. That's interesting. Do I still need a one-to-one? Should I just leave my original offer at my original one-to-one? That's usually what I'm going to do in that circumstance. But in your circumstance, where you're getting to raise the stop, but it's not to your price or above it, do you still want to take the one-to-one? And I still think that the answer is maybe. So I kind of do it depending on the circumstance. Maybe you want to take all the information that I am providing to you and be a better trader than me and actually create rules around it that you're going to do consistently going forward. So I hope that helps. Second question, heard you say earlier in the VTF that you saved some people a lot of money who tend to always take liquidity. I know you have said before to not be cheap. I was wondering, is this easier on counter trend trades? Example with the XLE today at 10 a.m. Example with the XLE at 10 a.m. Once extension is recognized on the smaller time frames in conjunction with the trading in the daily support area. That's what we were talking about down there. Are you trying to bid in once you identify this as a trade that you want to take? So am I trying to bid in once I identify that this is a trade that I want to take? The answer to that is generally going to be yes. Whether it's easier or not easier on a counter trend trade versus a with trend trade, I don't really have a great answer for you on that. I don't think that is necessarily easier on one side or the other. Unless it's momentum. Momentum's different. Pure momentum, pure breakout, then you kind of have to take liquidity. But otherwise, you can reasonably try to go inside bid to get filled, or even have a game plan where you bid in a little bit below the inside bid to kind of get the stock based on the risk that you want to have on it. Like, you know, you say, hey, the stock, my stop loss has to be 55 cents. The stock is trading at 67 cents. I want 10 cents risk. I'm going to put in a stop at 65 and just put that stop in at 65 so you get your 10 cents risk. And if you get it, great. You will a lot of times. If you don't, then you won't. I do like just going inside bid a lot as well. Generally, these are going to be moving slow enough. So first of all, you always want to be buying on the way up, like after XLE already put in its low as an example, or even if it was in an uptrend. You still want to be buying it on the way up after it puts in that potential pivot low. So, most of these names that we're trading to, especially like an XLE, if you go inside bid and you're willing to page up a penny or two, you're usually going to be able to get filled. Meaning track the inside bid by a penny or two. It becomes more difficult in thinner stocks. And in momentum names, you just have to take liquidity, because on a real momentum trade, if you're getting filled on the bid, it means you have a higher probability of failure. I don't necessarily think you have a higher probability of failure because you're going inside bid or a penny or two below the inside bid on a trade like this XLE bounce after you get your confirmation on the tail. A lot of the times you can still get filled, Like even, let's just say you're waiting for the close as an example. So you wait for the close of this candle. But you still have that tail up, tail down kind of, little, even on this candle you can see there's a quick little down tick. Like a lot of times you can get filled on those quick little down ticks. So that's usually what I'm looking to do. It will occasionally mean that you miss your trade. So sometimes what I'll do is, let's say I want to buy 1,000 shares, I'll take the offer on 400 and bid out 600. I do that sometimes also, just to make sure I have at least something. So something to think about. From Steve, doesn't getting your orders out there early as possible help you add liquidity? Yes. You want to get your orders out there. If you know your game plan, like in the XLE trade that we were just describing, you probably don't know when exactly you want to buy yet, right? Because you're watching it, you know it's extended, but you wait for the tail to come in. You're being patient to be able to buy on the way up after you have confirmation on what the stop loss should be. So in that situation, you can't really get your orders out too early. But in a different situation where you have a broader game plan, or for example, after you're already in XLE and you want to have take profit orders, I get all my take profit orders out right away, even if it's a very low probability of that order ever getting filled. One of the first things I do when I wake up in the morning and I'm logging in, somewhere between 5:30 and 6:30 Eastern typically, is if I've got a game plan on a swing position that says I need to take profit at a certain point, like as an example, at like 6:30 a.m. this morning, I was putting Apple offers out at $172. At 6:30 a.m. this morning. What's the probability of Apple going to 172 today and filling me? It's relatively low. But I'll tell you what, I'm going to be the first dang offer that gets filled at 172 if it gets up there. It gets up there at 3:30 p.m. My offer from 6:30 a.m. is getting filled. And, you know, it's price and then time. So I like making sure I'm first. You know, like SoFi that I'm kind of always in. You know, I had orders in SoFi at $6.50 that I put in at 6:30 a.m. this morning, about $6.50, maybe just under it. What's the probability of SoFi getting a $6.50 today? Very low, and it's a very thick stock. There's always like thousands of shares bid at every single penny. But I'll tell you what, if it gets to my offer just below $6.50, there might be 10,000 shares on the same ECN as me. I'm the first 100 shares that's going off on that ECN because my order's been out there since 6:30 a.m. So, yeah, get especially the take profit orders out. Any game plan orders that you have, get them out as early as you possibly can. Get them out as soon as you're in the trade, even if there's a low probability of actually getting the fill. Just because, well, if you've ever been offered, and this has happened to everyone if you've traded long enough, if you've ever been offered at what turns out to be the high of the day, but you don't get filled, and the stock goes all the way down, and you're upset, oh my gosh, I was offered the high of the day and I didn't get filled. Well, maybe, you know, if you got that order out as soon as you had your game plan, you would have gotten filled. So that's how I do it. From Brant, how do the exchanges decide which ECN gets filled first? So the exchanges, I'm going to put an asterisk behind this first statement. The exchanges don't decide which ECN gets filled first. The person who's taking liquidity decides which ECN gets filled first. If there are, you know, if the inside offer is 95 cents and every single exchange give me a second, Brant, before I get to all the questions that will upset you with the answers. Let's say it gets up to 95 cents, and every single ECN has orders out there, right? Maybe you put your order on NASDAQ at 6:30 a.m. and Denver Steve put his order out on EDJ like 30 seconds ago. But I'm the buyer. I'm looking at the inside offer at 95 cents, and I market buy routed to EDJ. He's going to get filled before you do, even though you were there first. And that's because I, as the buyer, decided to route to that way. Now, if you're the first person to place the order on NASDAQ, you will be the first NASDAQ fill. If Steve was the last order on EDJ, Steve will be the last EDJ fill. But he still might get filled before you, even though the order came out there. Last, just because he was on the right ECN when the liquidity got taken. And which ECN usually has liquidity taken first is usually the one that is cheapest to take liquidity on. So I like to put my limit orders on exchanges that pay me more. NASDAQ and ARCA are usually the ones that pay you more. That usually will also mean that even though I do all this stuff I was saying earlier, I get my orders out at 6:30 a.m., my SoFi order that I was just talking about is approximately $6.50. Even though I might be, there's a good chance I was the first, let's just say it's 100 shares, the first 100 shares to post at that price when I did it at 6:30 a.m. I beat every single other market participant. I am doubtful that I will be the first actual fill at that price. Because this stock is so thick, there will be people who are offered on ECNs where it's cheaper to take liquidity. Most of the volume that goes off in the marketplace are algorithmic HFT traders. HFT traders who trade millions and millions of shares every single day are going to have their algorithms built out cost efficiently. So they're going to take that liquidity from, let's say, EDJ first, because it's going to be cheaper for them, New York Stock Exchange next, because it's going to be cheaper for them, and probably NASDAQ last, because it's going to be more expensive to them, but it also means that I get paid the most. So that's a personal decision. I could choose to offer out on EDJ and make less and be earlier on my fills, or I could choose to offer out on NASDAQ and be a little bit later, but get paid a little bit more. That's usually what I choose to do, but yet I still try to be actually, first out there so that I'm first on NASDAQ in case just 100 shares of NASDAQ actually goes off. Now, we can get into all the things that are going to make Brent upset. So one of the things that we can start with that'll make Brant upset is that the first orders that ever go off on any exchange are always dark pool orders that are chiseling by tenths of pennies, which I've never overly done my research on that. It's complete and utter BS. It shouldn't be legal, but dark pools have different governing regulations that that don't necessarily apply to light markets, and it's super frustrating, especially if you look at any thick stock. Whenever it gets to the next penny, almost always the first prints that are going off are dark pull prints, and they chisel by a tenth of a penny. And yeah, I mean, it's just Flash Boy stuff, basically. You know, the 0+ strategy. They chisel you by a tenth of a penny, and then they're going to use you as a stop loss. And they're able to do that over and over and over and over again, and take a tenth of a penny risk to try to make 1 penny on the other side or 2 pennies on the other side. And, you know, obviously it works. So that's one thing that's really frustrating. I can't do anything about it. I can't do anything about it. It just it just is what it is. Yeah, so Josh's comment here, that you can also argue that without dark pools and algos, there would be much less liquidity. So I agree and I disagree with you at the same time. I think that if you got rid of dark pools that were able to trade on tenths of a penny, that it wouldn't take away from liquidity. I really don't think it would take away from liquidity. They would do the exact same things, and they would just basically do it on the light market. They would have to compete for that order flow, but they wouldn't stop it. And I'm not actually saying anything negative against algos. I'm specifically saying something against dark pools that have different requirements. So I actually don't. I think if you got rid of the dark pools tomorrow, it would just make a much fairer market environment, and it wouldn't actually negatively impact liquidity. That's just my thought process. The algo situation is different. If you got rid of algorithms, then yes, you're definitely losing a lot of the market's liquidity if the algorithms just disappeared tomorrow. And I'm not against algorithms. I think they have a right to kind of be in the market the same way anybody else does. There just shouldn't be anybody that can play on a different exchange on a whole another set of rules than you or me or John Smith down the street. You know, so that's kind of my general thought process on it. And then the other thing about the partials, I'm not 100% sure about this. So if you place an order that's less than 100 shares, I'm pretty sure it puts you at the end of the line. You don't get to participate. So there's a couple things that take you out of the time and price game, or the price and time game. Refreshing orders, hidden orders, and partial orders. So if you're using a refreshing order or a hidden order, it doesn't matter if you put that order out at 6:30 in the morning. You're basically going to be last when it comes time for you to get filled on that. I think that also applies with odd lots. So I think if you're offering out 10 shares, you're always going to be at the end of the line. All the 100 share orders have to get filled before the 10 share order gets filled. Now, one thing I'm not sure about, Brant, and it feels like it's this way, but I'm not sure. It shouldn't be. But I've had situations where, I mean, it was weird. It happened to me today twice, right? I was complaining sort of in the VTF in 2 different stocks. One was Pins. I think the other one was Google. I was offered both stocks at 99 cents. In Pins, this high is 98. I was offered 99. I got filled 2 shares at 99. It doesn't even show you in the chart because there was no 100 share order that went off, so there will be no print on the chart that gives you the 99 high. But I can tell you, because I had my order out there, that at this 98 cent high, I got filled two shares, very frustratingly, at 99. And then, of course, without filling me, it starts pulling back 20 cents, and then eventually it goes up and fills me. So, frustration avoided. The one thing I'm not 100% sure about, and it kind of feels like this, but I really don't know, is if I got partialed there for 2 shares. Now I got 98 shares offered. Now I'm an odd lot. Does that mean that I'm at the end of the line because I'm an odd lot? Or does that mean that I still stay at the front of the line because I was there first and I got partialed? I feel like, and I don't know this for certain, I feel like I actually go to the end of the line, which is also kind of BS. Because now you're an odd lot, not a round lot, so you're at the end of the line. So that one can be a little bit frustrating if that goes back to kind of what you were asking me about earlier. But yeah, that's pretty much how it all works. Shut up, Josh. What about midpoint orders? Do I ever use them? I don't use mid. So this is another interesting one that can also be a little bit frustrating. I don't use midpoint orders, but I will sometimes put liquidity into the spread. I did that in Fastly today. Fastly at the open or whenever I got involved in it initially, the inside bid was 73. The inside offer I think was like 80, maybe 79. I don't exactly remember. I didn't want to pay the whole offer. I didn't want to go inside bid either because I felt like I wasn't going to get filled. So I went mid spread. I went 76, and I got filled. I actually put a refreshing order at 76 because I didn't want to come mid spread and show my entire size, because I didn't want to scare the market up away from me and make it more difficult for me to get filled. So I put that order out there, and whatever, I ended up getting the entire order filled. So I'll do that sometimes. Now, if you go mid spread, are you taking liquidity or providing liquidity? You would think that it would always be providing liquidity, right? There's no offer there. I'm placing a bid in the spread. There's no offer there. If my bid gets hit, therefore I should be providing liquidity and get paid for it. But if there's hidden liquidity that was actually at 76 cents but was hidden, which is an order, we can all hide our liquidity if we want to. I don't recommend doing it because you tend to get really bad fills. But if there's hidden liquidity at 76 cents in this case, and I bid in the spread at 76 cents, I just took that liquidity that was hidden. I don't get my rebate anymore. I just took liquidity. So going in the spread can be a little bit tricky sometimes if you're hyper focused on your cost savings, because yeah, you're going in and you really should get paid for it as far as I'm concerned. You really should get paid for it because you're posting liquidity where you thought there was no offer. You are a liquidity provider, but there is there's a hidden order there, and then you take that hidden order and now you just took liquidity and you have to pay the exchange instead of getting paid by it. So that's another one that's a little bit frustrating, but it is what it is. It's all little stuff. Like I always say, I've been a professional trader for a long while now. I'm the first person to tell you that the markets are rigged. The key is you got to know the game, the rules behind the game, and that will just make you more informed on your decisions. Midpoint spread, is that midpoint peg? I doubt it. That sounds like a pegging order, it sounds like it would just continue to peg in the midpoint of the spread. But I've never used any of those orders, so I don't certainly know. Brant, how about you talk about how you got filled on a through print today or yesterday, and you got filled on an order that money should have belonged to somebody else, Brant. Give that money, donate that money to charity, Brant. I know you don't, and that's the thing. Look, psychology in trading is really important. It's very, very easy for us to heavily focus on the times when the market, air quotes, rips us off. The time when you get filled to 2 shares, then the stock goes the other way and you don't get filled, or you got stopped out in the through print. Believe me, I've been very, very guilty of this over the years. It does you no good. It puts you in a bad headset. So what I really try to do is, when one of those adverse situations happens that I think is a jip or whatever, I try to just completely move on. But if I'm ever the benefactor, which admittedly happens less often than the opposite, if I am ever the benefactor of a good situation, like, you know, getting that through-print fill like you're kind of describing, or, you know, I got a really lucky fill in pins at the Open today. See, the low of the day in pins is 52 cents. I got filled at 51 cents at 9 a.m., 29 minutes, and like 58 seconds. Like as the market was opening below the low of the day. That's the stuff I want to remember and point out. That's because, you know, if you're positive and you're trying to consistently keep yourself in a positive, you know, mental headset, then I think it just sets you up for better trading psychology that is going to put you in, you know, a better position to actually be successful as a trader. So instead of focusing on getting ripped, oh, I only got filled to 2 shares, the algorithms front run me, the dark pools front run me, all this stuff. When you get the opposite that happens, I got my fill at 27.51 today, below the low of the day in pins, or I got filled at the Open today. I got a couple lucky fills, actually. I got filled in the Open today at Tesla at 165.01. The low is 165.01. The reason Anthony didn't get any stock. You know, really remember those positive ones when they actually happen to you, and let that be your focus. You know, I think it's just much healthier trading psychology that sets you up better for success to approach this market with an optimism, even normally for us to get in our heads as traders. So, you know, why make it even easier for yourself to have that happen to you? Looking at you, Brant. Looking at you, Brant. Yes, what Josh just said right here is very true. I'll repeat it. Especially for newer traders, if you try to stick to limit orders as much as possible, unless it's a news trade or something, you won't make as many mistakes and you won't chase dumb trades as much. Yeah, for sure. I totally agree with that statement. All right, let me scroll up here in the VTF and see if I missed anything. Looks like I did not miss anything. If I did miss anything, just repost the question. There's a ton of stuff going on over here in the YouTube that we can take a look at. From Chi, my game plan for today was to look for a long in Google if the market stays above the pre-market low and above the highs of the unemployment numbers. I like that game plan. I had a similar game plan yesterday with Apple, but I need help to... I would also just add that key 104 level. That's what we were looking at for today. But I need help to read the signals. I'm looking at indices and specific names. How to approach this Google trade when the indices have not broke or closed above the unemployment numbers. But Google is already running. Do you have any suggestions on how to stay flexible when all the signals are not aligning? Well, if all the signals are not aligning, it doesn't mean don't take your trades. It just probably means take a little bit less risk. And how to have more conviction in the trade. Well, you want to build out for yourself, if you're doing all that pre-market research and you're planning on focusing on Google or you're planning on focusing on Apple, you want to build out for yourself what we call a trigger entry point. That's the spot. This is my spot. This is the spot where I'm really planning on looking at this stock and why. And for us, it's Google 104. 104 has been an important daily level. 2 trading sessions ago, on the gap down, I was on a few of these days, actually. We were calling out for longs versus 104. It worked pretty consistently. And then yesterday and today, the stock gapped below 104. So we talked about if the market's able to be strong, then you could look for a buy through 104. So you're doing all the right research. You're creating a game plan for yourself. You know what you want to be involved in. You're looking for the right things. You just don't have that key trigger spot where you're like, all right, 104, if things are looking right, that's the spot that my game plan says to go after. So to me, that seems like just the simple thing that you're missing, and try to build that in. Rivian inside 5 at 940. Interesting. I didn't even think this morning to look at Rivian as a secondary play off of Tesla, which I obviously should have. But yeah, inside 5 and up in Rivian off the second 5-minute bar, not bad. trade if the inside 5 is higher in the larger. To go long, do you usually only trade if the inside 5 is higher in the larger candle? I don't really understand the question. If the inside 5 is higher, all I care about is that the inside bar is the range of the inside bar is within the range of the previous bar, and then I want to, you know, buy or short the break of that candle. Funny Shark on a NVIDIA short swing. Yeah, a few people on the team here have really been trying to gun for this NVIDIA short swing. I know Josh keeps looking at it. I think it's a very hard trade. It's one of the strongest stocks that's out there. It's bull flagging on the daily chart. But obviously 280 is big resistance. It failed at that 280, I think, the last couple of days in a row. So that would be a spot where you could potentially short versus. So you shorted around 278. Should I cover my whole position tomorrow or keep it for next week? I don't know when NVIDIA's earnings is. That's the first thing you want to know is when is the earnings date. I'm looking around 245 with a 282 stop. I am $7 the money with 500 shares. Sure. So, look, from a reward maximization perspective, you already took the position overnight. You're already assuming all of the overnight risk. It's not worth keeping this thing overnight if you're just planning on getting out of it tomorrow. If it goes up tomorrow and triggers your stop, get out of it, manage your risk. But otherwise, you know, if you're in the money on it, you're taking the overnight risk, then you got to go for that full reward. You know, hopefully eventually you can have a trailing stop to the downside and your trade works out for you, and you know, maybe you have a game plan in place to book a little ahead of your target and, you know, kind of rebuy it on a bounce if it gets extended or something like that. Francisco saying NVIDIA's earnings are May 24th after the close, so you got plenty of time on the earnings report. So yeah, I would just say, you know, you took the overnight risk, get paid for taking that extra risk. And Tesla with some wacky prints. Cool. Oh, from Steve. Do I think that the mixed earnings so far are increasing overall bearish sentiment? It's a great question. I'm not sure. I don't know yet. I don't think so. I think it's too early in the earnings season yet. And if anything, the one thing I would point to, and I haven't seen the updated data on this, Pat's note a few days ago, after 7% of S&P companies had reported, had basically shown that companies that were trading higher on earnings were trading higher than they do on an average earnings season, and companies that were trading down on earnings were trading down less than they do on a typical earnings season. So if anything, that goes back to the conversation about expectations of earning expectations being lower, and you know, misses not being as bad, beats being even better, and inline being not the end of the world. So I think that's what we're seeing so far. You know, I didn't think that those Netflix numbers were great, but the stock acted well on it. The Tesla numbers obviously weren't great. The stock did not act well on it. JP Morgan was a monster, and the stock acted great on it. So I don't know. It's still a little early in the earnings season. I haven't seen anything really that's given me strong conviction off of your question. All right, cool. Looks like we got through it just after 5 o'clock out east. Hope everybody had a good day today. The open was great. You know, the open was great buying that gap down. I gave back a little bit of money on that afternoon sell-off, but it is what it is. I'm fine with it. I hope everyone was able to do well. And if you're in the YouTube, give it a thumbs up. Have a great night, everybody.